Hello traders, welcome back to a brand new video. In this video guys, I want to show you how to select or choose the best supply and demand zones. And you can also call this order block whatsoever, because in trading we have a lot of names that describe the same thing. So the first thing that you need to understand before we can continue with this video is that you need to have at least a trading strategy with rules. Okay, like let's say maybe you are trading only the break of structure, like on this pattern here. We can see that we have a high here, we have a high, and then we have a break of structure here. You will be looking to enter the market at this area if only you have this low being broken. So our demand zone will be at this area. So in this video, I want to teach you how to select the demand zone from here, the perfect demand zone. And then another thing that you need to focus on, your strategy must be backtested maybe 10,000 times or more. And then you also need to have risk management skills, because if you don't have this, that means you will always blow your account entering silly trades and so forth. And then your entries should also be confirmed. As you all know from this channel, we always confirm our entries over here, because we don't want to enter on an aggressive move when the market is just trending aggressively to the downside. And then another thing, you need to have a break-even strategy. What I mean about break-even strategy is that, let me show you an example. What I mean about break-even strategy, I'll remove this one here. You entered the market like this with a buy limit order, your entry is here, and then you put your trade to break even immediately. And then the market decide to come here and retest this previous low again, and then stopped you out, and immediately the market shoot higher. So you need to have a break even strategy for this kind of situations. So if you don't have that, that means your strategy will have more losses than profit. So let's move on to the structure of this video. As you can see, we have two candlestick formations here. Can you spot the difference? If not, then that means you see the same thing over here and here. But these things here, they are not the same, because we can clearly see that on this side, this candlestick here and this candlestick over here, they are not the same as this one. As you can see, this bullish candlestick here is having a higher high than this bearish candle. But on this side, we can see that the bearish candlestick is the one with the higher high. So that means we have to choose this one most of the time, because as you can see, you will find on this situation, you will find that the buy side liquidity was taken before we can see this aggressive move in the lower time frame. Let's say here is your 4 hours time frame. Then maybe let's say you move on to the 5 minutes. You will see a break in market structure. I mean the buy side liquidity that was taken from this high here, from this bullish candle. So let me show you on a real chart what it looks like. This will be the differences from the pattern 1 and the pattern 2. This one here, we can see that the market didn't break this high, but it shoot lower. But on this side, we can clearly see that the market manipulated the previous high before it can move aggressively to the downside. And then on this side, you will see that the market will just correct, and then retest this before it can shoot lower again. So that's how you must spot this kind of moves in the market. So right now, let's move on to a real chart so that we can identify this pattern here, because this one will be like efficient to your trading style. So let's find something on a chart real quick. Right now we are on the daily time frame of gold. So let's look at this area here. If you don't know how to draw your order blocks, there's a video in the description below. You can check it out so that you can understand how to draw order blocks and supply and demand zones. So let's say the zone is like this. Okay, we can clearly see that the market broke this previous low here. So if we move on to the lower time frame with the structure, we might potentially see something like this. We might see a move to the downside and then shoot lower, shoot aggressively, and then up again. You will see that this low here was manipulated and aggressively, and then you will see another move shooting higher aggressively. So let's move on maybe to the 30 minutes. Yes, as you can see from here, guys, we have an aggressive move here. This move is very aggressive to break this low, and then we can see another move shooting higher, and then the market started to correct and then continued higher. That's how those candlesticks will form in the lower time frame. So let's say maybe you see something like this, bullish. So let's say you see something like this in your lower time frame. In your higher time frame, let's say this is your 4 hours. This is your 4 hours time frame. And then you realize that, okay, the market broke this high here. And then what you need to look for is this one here, is this move here. In the lower time frame, you'll spot something like this. You will find that the market has already broken this low here. And then what you need to wait for is that structure from the previous video to enter the market around this area. Then that means you will find your zone around this area here before you can take a buy. That's how you can do your daily analysis, by finding this or scanning the market, trying to find this kind of pattern. And sometimes it can happen with just one candle, but I did this just because sometimes it can be difficult to spot them in the market. So sometimes it can be only this candlestick here, but in the lower time frame, the price action might look literally the same. So you will be looking to go long around these areas here, only if you have a chance to spot this in the higher time frame. But if you don't find that in the higher time frame, then I guess you won't be lucky to do something like that. So let's move on to a real chart so that we can do another example. Maybe we can choose another pair instead. So let's try to find it. Okay, this is your pattern here. Let's find that area. We can see that we have a buy side liquidity here being taken, and then you will be looking to enter the market, maybe let's say around this area. But if we move on to the lower time frame, you will see that this area will look the same as the structure that I have been explaining. So let's move on to the lower time frame and try to see if that is available. Because we are on the 4 hours, we can use the 5 minutes instead. So right now we can clearly see that the market was aggressive around this area, and then it should lower aggressively, and then it started to correct around here. A correction is a slow move in the market, as you can see. So if you are looking to enter short on this kind of situation, you can try to at least use this candlestick here, and then you can confirm your entry when the market closes bearish after touching the zone. Or also you can use this candlestick, something like that. So let's try to find another example. Okay, another example is this area here. You can clearly see that even if we draw the zone, you don't need to have, you just need to scan the market and try to find, let's say you see the market doing something like this on this. You will just draw the line here like this, and then you will just move on to the lower time frame to enter around this area. So let's move on to the lower time frame again, 5 minutes. Right now you can clearly see that the market was aggressive to the downside. As you can see, we have an aggressive move to the downside and then an aggressive move to the upside, and then the market started to correct. And then you can use your zone as this one here, and then you just enter when the market comes to the zone and close bullish. Your entry will be this candlestick here, or even this one for early entry, and then you just enter the market, put your stop loss below. So that's how simple it is. So I guess this is not a long video because I'm going to cut it in the editing. So guys, I'll see you on the next one. Stay safe, always use a stop loss. And also another thing, the link to the Telegram channel is in the description below. Come. And then another thing that I want to point out, please don't forget to subscribe to the channel. Okay, see you on the next one.